Welcome back, friends. So, the US futures have tumbled Monday morning as a part of a global market sell off centered around the US recession fears. The Japan's Nikkei 225 has plunged 12% in its worst day since the 1987 Black Monday crash for Wall Street. And if you look at the US stock futures, this is how they stack up at this point of time. The Dow Jones futures have dropped 880 points or 2.2%, falling a 611-point loss on Friday. S&P 500 futures at this point of time are down 3.3% after the benchmark lost 1.8% on Friday. Nasdaq 100 futures have lost 4.88% as the big tech stocks got hit hard in early trading today. Fears of a US recession were the main culprit for the global market meltdown after Friday's disappointing July jobs report. Investors are also concerned that the Federal Reserve may be very much behind the curve as far as cutting interest rates is concerned. They need to come and cut interest rates quickly. The Claudia Somm rule has got triggered, and a cutting of the interest rates would help in bolstering an economic slowdown, with the central bank choosing instead to keep rates constant in the highest in 2 decades last week. So there's also an unwinding of the once hot artificial intelligence trade going on, which I have warned from time to time. Tech shares are among the worst performers in early morning trading on Monday. Nvidia has tumbled 9% after going into the session already down more than 23% from its recent highs. Apple has cratered more than 8% after Warren Buffett's Berkshire Hathaway cut its stake in the iPhone maker in half. And that's quite a news to be absorbed by the markets today. So Asia has already absorbed it, and the United States is about to absorb this news. Other losers include Tesla down 7% and Broadcom and Supermicro Computer are down more than 9% apiece. In Asia, the Japanese stocks have confirmed a bear market as Asia Pacific investors had their first chance to react to the poor jobs figures emanating out of the United States from Friday. The 12.4% loss on the Nikkei, which closed at 31,458, was the worst day for the index since the Black Monday of 1987. The loss of 4,451 points on the index was also the largest in terms of points in the entire history. And we had on Black Monday, we have the Dow losing 22% in one single day. Treasury yields have tumbled on recession fears as the investors have flooded into bonds for a global safe haven. As you know, the bond prices move inversely to yields. The benchmark 10-year note on Friday yielded 3.76%, down from where it was 1 week previously at 4.21% and the lowest in a year. Bitcoin has tumbled from nearly $62,000 on Friday to around $52,000. Europe's Stoxx 600 is down 2.6% in London. CBOE volatility index has shot higher to above 53, its highest since the early days of the pandemic in 2020. There is also the unwinding of the yen carry trade, adding fuel to the global market decline. And after the Bank of Japan raised interest rates last week to support the yen. The yen is now rising in value versus the US dollar after being at a 30-year low just a couple of weeks back. This is all painful, and I think there's a lot being absorbed over the weekend between the Berkshire Hathaway cutting its stake in Apple, and you had the Japanese yen rising and the yen carry trade being unwound. This is a pullback, a correction, and we'll probably hit oversold at some point, but I believe some more pain is still on the cards. I've been warning it over the last 10 days. Be careful. And this is what we do best at Global Money Investor. We tell you in advance much before anybody else. We also have our good predictions about where the markets will be, the big turning points in 2025, the big falls. This is where the time will come when you can build huge long-term portfolios. To get to know more, do understand that even a country like Bangladesh going through a big civil unrest, and I believe the military has taken over with its premier Sheikh Hasina now on the way to Delhi, has left Bangladesh. So turbulence, civil unrest can also be the latest to add to the woes of the world, which are already brinkling with a serious war-like situation in the Middle East between now particularly ties between Iran and Israel show that some more attack on either side are expected very soon. So the world does not represent, or it represents a rather grim scenario of what lies ahead. Short term, the momentum has been broken. The VIX has risen rapidly across the world after most indices running at all-time highs, and that too consistently day by day, we have seen that there is a certain amount of negativity which has started creeping in the markets, and for a good reason. Most markets have been exceptionally overvalued, and there is a time to return to normalcy. How long this can happen or continue before the big rebound happens, big or small, we'll tell you soon. And whether this is a scenario which is here to stay, that is, the markets will continue to dither around or fall, whether this is a time-bound correction or a price correction or a combination of both, is something that would be there in your minds. I believe that I can tell you that, but before that I must tell you that there is still, as far as the US markets are concerned, there is still some more pain that lies ahead. Much of the hype that got built around artificial intelligence is getting wound up, and more will happen at a certain stage later on, where you will see the big turnaround and the falls when the big tech companies start cutting in their spending on AI. That will be the big drop point. We'll tell you all when that is expected to happen. Timing the market, the various sectors in the market is our specialization, and we do that the best at Global Money Investor. Do join our Prime or Prime Plus Telegram groups to get an overview of where the US markets are headed from here, the Dow Jones, S&P 500 and NASDAQ. And yes, if you'd like to know a little more about the Indian markets, you can join the Premium or the Premium Plus groups, which gives you 10 to 12 days view of where the markets are headed from here. All scientifically analyzed, given with good financial discipline, you can make great amount of money. Number to get in touch, you may WhatsApp us on 982-086-1044. Alternatively, you can also email us at globalmoneyinvestor@gmail.com. globalmoneyinvestor@gmail.com. I'm sure you would like to know how your portfolios are going to fare over the next few weeks, months, and it is not an ordinary thing to lose huge amounts of money due to events which you were not able to see, but we were able to tell you. Happy investing. Have a great day. Take care. Bye-bye.